Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today's Tuesday. It's April 12th. It's about 8:04 in the morning. Market's going to open up in about an hour and 26 minutes, give or take. We have a big report, a big inflationary report before the opening bell. It actually comes out in about 26 minutes. It's the Consumer Price Index. And this is going to be the report that's going to tell us how much inflationary pressure is impacting the consumer and how much inflation is higher based on a 40-year high, which is where it was last time. Now, year over year, the target is 8.4%. We need to keep a very close eye on that number. If the number is below, let's say it's 7.6%, then the Fed can say, well, inflation is not as bad, and we don't have to go crazy and go half a percent point. We can just go quarter of a percent point. That may cause a rally. On the other hand, if the number is a lot higher or right at 8.4 or around 8.6 on the upper end, then the Fed can say, well, hey, we told you so. We told you we got the war, we've got the economy, we've got China. We need to take action. We need to be more aggressive. So this number may decide how aggressive the Fed will be. Keep your eye on the year to year. Month to month doesn't mean much, but the year to year number. Again, the target is 8.4%. And the biggest benefactory or the biggest impact that's going to be seen is on the bond market. Now, again, if the number is on the low end of the range, there's a good chance the bond market will go higher. If the number's on the higher end of the range, the bond market may not do anything because it's already overdone. It's already way oversold right now. So I'm actually looking for the bond market to start moving higher. I'm going to put this little box here. And what I'm hoping is that the bond market will already or is already pricing in this inflationary pressure right here, and it'll cause the bond market to rally so we could sell it. I don't think the bond market's going to turn around. I'm not delusional. Interest rates are going higher, but I'd love to get a nice short in the bond market and so we could ride it to the downside, but I need to see a rally to the upper end of the range. But again, keep your eye on this report. It's going to be a big report. Now, the market is opening up, or at least it looks like before the report. God only knows where it's going to open. But the report, pre-report, it's up a little bit. It took a little bit of a dump yesterday based on the volatility we've been seeing. Now, put the call ratio is at 101 right now. It's in our danger zone. And you could see here, even, let me just extend it here. Even though it cooled off a little bit, it never went down to this level, the oversold level. It's been moving near the overbought level, and it's back in the overbought territory again. And this tells, the oversold territory. When this is overbought, it means the market's oversold. When it's down here, when it's oversold, the market's overbought. It's an inverse indicator. And this is telling us when it's over 1, it's telling us that the ratio of put buyers is too high in comparison to call buyers. And right now it's at 101. It's at the danger zone. It's at that red line right here. Now, typically, if it's anywhere here, it's noise, pure noise. But anytime it goes above 1 or below 70, I don't know why it's at 69. Let's bring it up to 70. It's meaningful. Now, it hasn't been below 70 much at all, but boy, oh boy, it's been going up to these levels quite a bit, and I'm looking for it to break. And if it does, it means if this goes lower, stocks typically go higher. All right. Now, so we are overdone. The market's a little bit oversold. I believe that this report may be already baked into the market. The White House was talking about it. The Fed has been talking about it. So I believe the market may be already anticipating this 8.4%. Another report we have that's going to be a big report this week is going to be the Producers Price Index. But honestly, the retail sales is going to trump that report because 2/3 of our economy is retail sales. So this is going to be very impactful. Today's report is going to tell us how the supply chain is impacting us and how the inflationary pressure is impacting us. And then Thursday's report is going to tell us how or what consumers are doing about it. In terms of the broad market, let me show you some price levels we need to pay close attention to. Let me just pull this up here. So the stock market's still within its range. If it breaks below this level right here, there's a good chance we're going to go back down to the base. But we're holding on pretty good right here. And so far we're looking okay. So if we rally from this point, we could go higher. But again, I anticipated us cooling off and consolidating after this run up. That's why I drew this line right here. So this is not unusual if we get our grip back up. But we need to go above the 200-day moving average. Till we get above there, nothing good is going to happen. That's around the 44,800 level, or 4,460 level on the SPX. Now on the Dow, and I'm looking at the diamond, so you have to add a 0 if you're looking at the Dow. We're still holding up pretty good around this area, and as I mentioned, I'm not too shocked that we're consolidating around here, especially after we went from 326 to 353. But I'm curious if this consolidation is going to continue, or are we going to go down all the way to the base? That's the question right now. And if we could stay within this trend line, we would be doing okay. Now, looking at the major sectors, and I want to look at the major sectors. Let me go through them with you right now. If you look at the major sectors, energy is still leading. Communication services is still lagging. It's April 11th now, right? I want to show you. Let's go back a month ago. Energy, communication services. Let's go back another month. Energy, communication services, February now. 2 months, nothing has changed. Let's go back another week. Energy, consumer, January 31st. How about another week? Energy, do you guys see why I use my CSI scan? Nothing has changed. Let's go back another week. Energy, communication services. Let's go back another week. January 7th. I think it changes here. Yeah, it does. So from January 7th till today, the same sector has been leading and the same sector has been lagging. This is why I use my CSI scan. It's powerful. It works. So as far as the top stocks, the top stock right now, let me just really quickly do this. This is an error here. I don't know how AT&T got up here, but let me see if I can that's weird. Ignore the AT&T. Moss, Oxy, Halliburton, CF Industrial stocks are starting to outperform the energy stocks, which is something I expected. So you may see Nucor, you may see CF Industrial and Mosaic up here, because these basic material and stocks that are required to make chemicals they're mined at the border between Russia and Ukraine. So there's a huge run up on them right now. Otherwise, you still have all the basic material stocks rallying. Now, in terms of the top stock, let me go through here again. The top sectors, you got energy. So just so you guys can see it, energy, communication services, because I sometimes go through fast. So energy, top stock energy is Occidental Petroleum or Halliburton or MRO or APA. Take your pick. And then on the lower end of the range, I would say that it's still PayPal or Netflix, one or the other. PayPal or Netflix, but you could go with Etsy as well. Etsy is the weakest stock right now. Now, in terms of global economy, I usually do this first, but I figured I will go backwards today. Investors are waiting for U.S. consumer price data. That's what's coming out at 8:30 today in about 17 minutes. Corporate earnings are starting to come out with bank stocks. Inflation is still at a 4-decade high. Markets are very uneasy based on the Fed's plan to raise interest rates or roll back ultra-low rates. All eyes are on the CPI, which is what I said, surge 8.4%. I'm just summarizing what we have already covered. Investors are worried about inflation might be strong enough to encourage consumers to cut spending, which would likely mean sharper slowdown in economic growth, which is why I'm so focused on the retail sales report in conjunction with the CPI report. That's coming out on Thursday. The Fed has told us that they may be up for doubling the amount of rate hikes from 1/4 basis point to 1/2 basis point. Oil has fallen back in expectation of weaker Chinese demand since China has COVID right now, but basic materials are still up like there's no tomorrow. Prices above 130 per barrel were here for a while. Automakers, other manufacturers are reducing productions after authorities tighten restrictions to help COVID. Now, in terms of price action, we need to keep our eye on the 200-day moving average, which is at 3,000 or 35,000 level on the Dow, And we need to keep our eye on the support level that I drew right here. If we break this, we're going to go down to the base. In terms of sectors that are doing really well right now, financial looks like it's petering out. Energy looks like it's choppy. Utilities looks like it'd be coming off a little bit. Consumer staples looks like it'd be coming off. I'm seeing a lot of choppiness and volatility. I'm not seeing a lot of directional range. Consumer industrial stocks looks like they could be down a little bit. A lot of volatility in healthcare stocks. When you see these volatile days down, we may see reversals of that today. So technology looks like it's going down to the base. Consumer discretionary looks like it's given up the ghost again. It's going to go down to the base again. Real estate looks like it's holding on. Communication services looks like it's a dead duck. And basic materials looks choppy. Overall, I'm not liking how the individual sectors right now are looking. At best, I'm seeing a lot of choppiness. At worst, I'm seeing more downside with the offensive, the speculative stocks, the junk stocks, or the speculative Nasdaq stocks coming down to the base. Let me give you a level on the QQQ that you must pay attention to right now, because this is going to be very, very instrumental in what we're seeing right now. The breakdown level on the QQQ is 340. If we break this 340 level, the odds are we're going to go down to the base. Be very, very, very careful and be very mindful of today's CPI and retail sales data that's coming out on Thursday. And remember, top stock, all the energy stocks. You've got the I don't even know where to start. You've got Mosaic, Occidental, Halliburton, U.S. Marathon. Mosaic is not an energy stock. So you got Occidental, Halliburton, U.S. Marathon, APA, love APA, natural gas stock right now. And on the bottom, we've got Etsy, Penn National Gaming, PayPal, and Netflix. Don't like those stocks right now. The speculative stocks are taking it on the chin, under the chin right now, or on the chin right now. Folks, while everyone is focused on inflation, oil prices, the war overseas, there's some egregious spending happening behind closed doors of corporate boardrooms. Not bedrooms, boardrooms. In the finance world, this spending is known as buybacks. But really, it's a sneaky way for corporations to boost share prices. The last time we saw buybacks reach this level was in 2018. And the markets, they went crazy. We could see more big moves like that in the near term. New Money Crew Lance Ippolito, he's confident he's found a strategy that only signal investors really need to pay attention to with his insider imprint strategy. I can't wait for you guys to see the insider imprint strategy. Click the link below and learn more about the insider imprint today. Egregious spending behind closed doors and corporate boardrooms? I got to hear all about this. I'll be there, and I want you there too. And remember, tomorrow we've got long and a short actionable trade ideas, complete with levels. Don't miss out. And if you're watching on YouTube, you could find this video on the Wealth Press YouTube channel. The link for Lance's imprint strategy is in the descriptor. Hope you guys have a great day. Send me some emails. Support@marketgeeks.com. Have a great Tuesday. Bye.